This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, April 18th, 2016. Euro dollar. So the pressure in the euro is tilted back to the downside following that recent breakdown below a range support at 113.27, and the focus now is on a potential lower top ahead of the next downside extension towards next key support on a short-term basis, which comes in at 111.45 further down. At this point, if we do see any rallies, expect them to be well capped ahead of 114, with only a break back above 114.65, that recent 2016 high, to compromise this potential topish outlook in the euro. Above 114.65 would expose a direct retest of 115 and then potentially 117.10 further up. Sterling dollar. So the overall pressure in the cable remains to the downside, with the market putting in a series of lower tops, now considering a fresh lower top ahead of the next downside extension back below recent support at 140.05, which would expose the 7-year low from February at 138.36 further down. At this point, it would take a break back above recent highs that we saw at 143.48 to take the immediate pressure off the downside. Dollar yen. So dollar yen remains pressured to the downside following that recent breakdown below some key support in the 110 area, and this leaves the door open for the next key breakdown towards a measured move, which comes in at 106.50 further down. At this point, rally should be very well capped, with only a break back above recent highs that we saw at 109.73 to take the immediate pressure off the downside. Euro Swiss. So Euro Swiss has been well supported down towards 108 yet again, with this level acting as a formidable medium-term support zone. At this point, the market is expected to continue to be very well supported into 108 ahead of the next upside extension beyond 110.24, recent highs that we're seeing back on the 10th of March, and towards the multi-month peak from going back to February at 112 further up. Again, only below 108 here would compromise the constructive outlook. Aussie dollar. So Aussie dollar is consolidating just off recent 2016 highs set last week at 77.37, but it's difficult to determine whether the market is looking to top out now ahead of the next major downside extension, or if it's looking for a fresh upside beyond 77.37 and towards next key medium-term resistance at 78.50 further up. At this point, the pressure does remain on the top side, but if we do see a break back below 74.77, that's the low going back to the 24th of March, that would do a good job of shifting the outlook, confirming a top and strengthening the prospect for an acceleration of declines. Dollar CAD. So dollar CAD is finally showing signs of a potential base after some significant decline since January, with the market putting in a bottom at 27.45 thus far, a 2016 low, ahead of this latest minor rebound. At this point, though, we would need to see a break back above 32.19. That's the high going back to the 5th of April to take the immediate pressure off the downside, and until then, there is still risk for a lower top and next weakness towards measured move objective in the 125 area further down. Kiwi dollar. So Kiwi remains very well supported for now on dips, with the market trading back above 69 and closing in on a retest of the recent 2016 peak at 69.67. Having said that, though, on a medium to longer term basis, the market has been very well capped up towards and ahead of 70, and so there is risk for another topside failure ahead of the next major downside extension. But it's going to take a break back below 67.59. That's the low that we saw on the 5th of April to confirm or strengthen this outlook and accelerate declines. SPX 500. So the S&P 500 has rallied up significantly since February, all the way up to just shy of 2100 at around 2088 ahead of this latest minor pullback. But again, overall, the market is expected to put in some form of a meaningful lower top now below that record high from 2015 ahead of the next major downside extension below 1808 and towards the 1500 area further down. At this point, though, we would need to see a break back below 2021. That's the low going back to the 24th of March to strengthen this outlook and accelerate declines. Gold. So although gold hasn't done much in recent trade and we've seen a lot of choppy up and down, the price action is overall constructive following the break that we saw several weeks back above some critical previous resistance now turned support in the 1190 area. At this point, look for any setbacks to be very well supported towards 1190, with the market favored to eventually break higher to fresh 2016 highs beyond the recent 1283 area highs and through and towards the 2015 peak at 1307 further up. Really only back below 1190 would take the immediate pressure off the top side.